All right, guys, back to work. Back to work. Hope you guys made some money out there today. Boy, markets kept on running and running and running higher today. Everyone's waiting for a pullback tomorrow, right? Now, pullbacks sound pretty simple in theory, don't they? But if you have some experience in trading, you probably know already, pullbacks are not as easy as they sound, right? It's difficult to pick the right pullback entry. The trick, the key, the secret to picking pullbacks is all about understanding risk-reward ratio. We'll talk about why I say that in the video tonight, because once you understand risk-reward ratio, then you'll know how to time the perfect entry. I have two real simple chart patterns we'll cover tonight. We'll talk about all my favorite trades to pick the perfect pullback tomorrow. By the time we're done tonight, you'll have an easy roadmap to pick your perfect pullback and make some money on Friday. And before we jump in and talk about my favorite trades here for tomorrow, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out. Give me a hell yeah down in the comment section below. Thank you so much for tuning in, supporting the channel. Enough of the intro, though. Friday is right around the corner, and I'll tell you, there are two really easy chart patterns I'm excited to share with you guys here for tonight. Now, charts are all ready. As you can see, NASDAQ, triple Qs are ready. The E-mini and the SPY is ready. Everything's bullish. You don't need me to tell you that, right? Everything's bullish after those big blowout earnings from NVIDIA. We get that big move higher, and we've got some trading ranges on the 60-minute time frame. If you put those two clues together, big move higher and some trading ranges, you pretty much have everything you need right there to make money on Friday. The challenge is we don't trade off a 60-minute time frame, right? We trade off tick charts in our trade room. We're going to drill down to our tick charts and talk about how to use risk reward to time the perfect pullback. We'll talk about that here in a moment. But before we do that, though, let's check our schedule for tomorrow. There's no major news on the schedule for tomorrow. The most important thing you have to remember is tomorrow's a Friday, and Friday is not like any other day of the week. Here's why. First of all, Fridays get illiquid the later the day gets. So 11:30, 12 o'clock, 12:30 Eastern time, the later the day gets, Fridays get low volume, and they tend to make these big kind of low volume moves on Friday afternoon. Second thing is on Friday afternoons, we traders are usually not at our best. We lack discipline, we make risky decisions, we make poor decisions as the day gets older. I have something in my trade room which I call the Friday mindset. What that means is I want to get in early when I'm at my best and the markets are at their best. I want to take some profit early, remove risk early, but Friday afternoons, they love to run. So I always try to leave a little piece of my trade open, because go back and look for yourself. The last couple Fridays, right? Probably 3 out of 5 Fridays will run and run and run. My mindset of Friday is get in early, take profit quickly, remove risk early, right? And then leave that runner, because again, Friday afternoons, they love to run. Go back and look at last Friday and you'll see a great example of what I mean. So keep that Friday mindset in play for tomorrow. Now, S&P's ready, NASDAQ's ready. Let's go grab the charts here now and talk my favorite trades here for tomorrow. We'll begin the S&P and the SPY, wrap things up the NASDAQ and the triple Qs. As I mentioned earlier, we have a big move and a trading range. Everybody wants to buy a pullback right now, but it's so much easier said than done, right? We all know that. We all know picking the right pullback is a bit challenging. Let's drill down to our tick charts, because the tick charts, they make everything so much easier. This is, of course, a 7,000 tick chart. You'll see time frames in the upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA, the only indicator you need to find lots of winning trades with us every morning in our trade room. There are 3 pretty simple clues we have right now on this tick chart that tell us exactly where the best entries will be for tomorrow. The first clue is that news spike. If you watched last night's video, we talked about how the size of that news spike, once we saw a pullback today, could be used as a measuring spike. Combine that with the pendulum swing off that trading range been watching all week, and it does look like we've found our top here on the S&P. The NASDAQ, by the way, hasn't quite reached its news spike yet. We'll talk about that here in a moment. So it does look historically probably have found a bit of a top here on the S&P using that new spike technique we talked about in last night's video. Next clue, second clue, is a big move higher. Now, anytime we see a big move like this, we don't want to buy high. I realized today kept going up and up and up, but historically, we can't make it a habit of buying high. We want to buy a pullback, right? Buy nice and low. Now, I see two of these areas where I would like to buy a pullback. One is a shallow pullback, and the other is a relatively deep pullback. Remember I said earlier, risk-reward ratio is the key to understanding how to time the perfect entries on these. We'll talk about that here in a moment. And that leads me into that third clue here, which of course is a range breakout. Had a range here in the morning this morning. Whenever we see a market break out of a range, we know we look for breakout pullbacks. I have a breakout pullback there, and we get that big range been watching this week. That's also going to be a breakout pullback area as well. Once again, you'll notice these two clues, right? Big move up and that range breakout pullback area, shallow pullback, deeper pullback. Let's talk about now how we can use risk reward ratio to pick the right entries, right? Because nobody has a crystal ball. It's not easy to pick that perfect pullback. I don't know how far this thing will pull back here for tomorrow, but I do know though, if I understand risk reward. So for example, if I see a shallow pullback, right? Shallow pullbacks are tough because shallow pullbacks don't give me what? They don't give me a small amount of risk with a big amount of reward, right? If I have a shallow pullback, I need to use what I call a bear trap in my free video classes, right? You guys take my free video classes. We need a bear trap. And the reason why is because bear traps are going to allow us to buy as low as we can in a shallow pullback environment, right? In a bear trap example, remember, they're a higher high in price. They're basically bears try once, they're bears try twice. We get right underneath that low. And the idea behind this is I can take a small amount of risk, right, for a much larger amount of reward. Makes sense? So when I have a relatively shallow pullback, I need to buy as low as I can. And to do that, I'm going to buy with a bear trap like I talk about in the free video classes. Now, in all reality, I would much rather get a deeper pullback, right? I mean, I would much rather buy nice and low. When I buy nice and low, the challenge on this one is the strength of that pullback is going to want to pull back and retest again, right? Momentum becomes a problem with a deep pullback. The good news is on a deep pullback that now my risk is here, my reward is way up there. See, now that is something we can get excited about. That is a good looking risk reward ratio. On a deep pullback, we don't need to use a technical bear trap. What I'm going to use is what I call a failure pattern. In the free video classes, I call these 2-try failures. I want to let the bears come in. Remember, I don't have a crystal ball. I don't know if it pulls back here, here, here. I don't know. This could be a big rug pull tomorrow based on the size of the move higher that we saw today. So I'm not trying to pick the bottom on this. But once it starts pulling back to that moving average, we're an overall bull market. Anytime we see a big run like this, we know a deep pullback and a run right back to that high is what usually happens. That's what the odds tell us, right? The percentages tell us we're going back up to retest the high. If I can get some rookies coming in and chasing that thing lower. Let them try twice. Once those bears are locked in, now think about where their stops are. Those stops are the fuel we can use here now to run this thing back up and retest the high. Now notice the difference, right? Notice the difference. On a shallow pullback, the risk reward ratio isn't very good. I have to buy as low as I can with a bear trap pattern, right? Buy low with a bear trap pattern. If it's a deeper pullback, now it's just momentum. That's the only challenge now. Now risk reward is great. Now I can buy above those highs and use that failure pattern we talked so much about in the free video class. Now watch closely. You're very important because as the market races back to retest the high, again, bull market wants to go back and retest the high, I'd like to get in again using that same bear trap pattern. We oftentimes see these combinations, right? Where we get these 2-try failures, we run stops as fuel. Then as we're going higher, we don't want to buy high, we want to buy low. higher high in price, and we get that bear trap up off of that low. Make sense? Does that make sense how risk reward ratio will tell you the best entry patterns to use? Awesome. Now, I know most of you guys watching right now have taken my free video classes. You've learned things like bear traps, failure patterns, how to trade big moves and breakouts. But if you're watching for the first time right now, this might be a brand new language for you. I look at charts a bit differently than I think a lot of other YouTube channels do. So if you're watching right now, this is all way over your head. Don't you worry. I teach all these entry patterns. I have hundreds of examples of failure patterns, bear trap patterns, how to use risk reward ratio to run stops to make consistent money. I teach all of this inside our free video course. I'll put a link up top there for you, upper right hand corner. Hit that link that popped up there and take that free trading class, because the strategy I teach in that video series will teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. Then I'll teach you 4 my favorite entry patterns to help kickstart you making money. Guys, the markets are way too good right now not to be making consistent money. If you're tired of missing the best trades each day, if you're struggling with losses right now, hit the link up top there. That will give you an easy roadmap to follow. It's perfect for someone trying to make the jump into full-time trading. Also, too, I'll put all the important links we talk about tonight in the description of the YouTube video, the free class links. We trade together every morning in our trade room. I'll put the trade room membership information down there as well. And also, too, I post a lot of updates on Twitter throughout the day. If you're on Twitter or X, give me a follow. All the details will be down there in the description, right? So now you know where to learn more. And again, I have hundreds of examples of failure patterns, bear traps, and trade and breakout pullbacks we're talking about in this video. Now, let's go over some variations of this, right? Because that's the basic nuts and bolts, right? The basic nuts and bolts is shallow pullbacks, look for bear traps, deep pullbacks, failures, and then traps on the way up. One of my favorite trades, and we talk about this a lot in our trade room, is oftentimes what happens is we'll get that deep pullback, we'll trap those bears in, we'll get our winner, we'll get this thing running higher, but because that momentum is so strong going down, it oftentimes will hold a level of resistance overhead and run back down to retest that low. You know what I mean? A lot of times that pullback is so strong that with all that momentum, it wants to go back and retest that low. At this point, we've already taken our one-to-one target. We've already removed risk, stopped the point of entry, right? We're already in the green on that trade, but now it comes slimming back down, stops me at a point of entry, and retest that low, okay? Watch very closely. This is not a reversal. This is a huge bull market. I want to do it again. We call these double bottom reversals, and I'll tell you right now, these are oftentimes the biggest moves on a Friday late day, early afternoon. As they retest that low, think about what happens down here. All the professionals, right, who sold that pullback right there, they're taking their profit at this low. It's safe to say that people who sold short up here become buyers, right? They're buying their way back at that low. Now, buyers are going to buy there anyways, right? Buyers are going to buy that double bottom because buyers are going to buy low. It's an overall bull market. The buyers would love that double bottom to buy low. Now, think of what's happened now. Once we start pulling back to that moving average, because again, I don't know how far this will go. It may overshoot that low by a little bit, right? So be aware of that. But once we start to pull back to that moving average, if I see bears come in, these are rookie bears, right? These are not professional sellers down here, right? Professionals would never sell low like that. These are rookies, small accounts, tight stops, right? They're easy to run over. When those bears come in, rookie bears, and they try a couple times, think about it again. Where is their pain? Where is their pain? Where are they in pain on their trade? And punch it right into that pain area, those stops, right? Then as it runs higher, and again, we know where the market wants to go. It wants to go back out and take that high. As it runs higher, this one entry pattern we use to buy as low as we can, what is it? It's always going to be a bear trap. Now watch closely. If we're lucky, there'll be a trend line off that high. See that? Move down the low. There's your channel. Those are almost guaranteed winners right there, right? That little bear trap off the low of that new channel. We call these hidden channels in our trade room. So again, if we do get that deep pullback, trap the bears in, but for whatever reason, they hold, again, they'll oftentimes hold levels of what was support becomes resistance. The market rolls over. It takes me out my point of entry. Oh, well, part of the game, and now trap them in again. Right, that double bottom reversal. These, again, are oftentimes the biggest winners we get in our morning trade room, 8 o'clock Eastern time every morning. All right. Now, here's one more variation. It's not my favorite, but you know me, right? I want to make sure we all have the tools we need to make money in any scenario, right? The V bottom, the dreaded V bottom reversal. See, sometimes we get that really sharp rug pull, and there's so many buyers down here because it's such a big move going higher, right? There's so many buyers there, it just springs right back up again. And I never get the chance. I don't get the chance to trap the bears in down there. Remember, I'm not in the business. You should not be in the business of trying to pick that bottom. Trying to pick tops and bottoms, that kind of all or nothing entry, it's just a matter of time before you blow your account, right? So if we roll lower and it springs back up again, I know it's painful. It's not easy. What happens though is the market will oftentimes begin to grind and grind and grind higher. The minute you see that grind, now you know exactly what to do. Watch closely. Draw a trend line off those highs, okay? Bring it down to that low. And then what do we always say in these videos? Look left, right? Look left. Find some prior swings. And my favorite trade on this is a first test, right? I'm going to get underneath a prior swing. And unfortunately, I can't teach all the entry patterns in this video, but these are basically any entry pattern we talk about in the free trading class. Could be a failure, could be a bear trap, could be a pullback combination, a strength move, as long as you get it before you get back up to retest the high. The key though is you want to draw that trend line off those highs, pin it down around that low, and don't miss that first touch, right? That first test off the low of that channel, because as always, right, first test is always the best test. Now, one question I'm sure everybody wants to know. All right, Joe, if we think we're at the top right now and we're anticipating a pullback, now how would I sell something like this? I'm glad you asked. If I sell this, well, first of all, we all learned today that these bull markets after big news events like this, they can keep on going up and up and up, right? So right off the bat, we know trying to sell and pick a top on this is not easy, is it? It always looks easy in hindsight. So right off the bat, be aware, trying to pick a top on this is always quite difficult. The key is to trap buyers who are buying too high. We know right now that there are probably some rookies out there trying to buy high up here. If I can trap them in with a bull trap entry. Now, bull traps. If I want to sell during this pullback, there are two types of patterns to watch for. They're both bull traps, but there's slight variations of bull traps. One is what I call a crown reversal bull trap. It's buyers try once. It's buyers try twice. Now watch how I draw this. It's a lower low in price, all right, because buyers want to buy low. As it goes lower, more buyers come in. Then we'll go right above that high. Okay, this is nothing more than that same bear trap pattern, but flipped on its side, right? It flipped the top. It's a bull trap pattern, right? So as we pull back, buyers get in, buyers get in. Now remember, I need to sell as high as I can. Why? Because as we go lower, who's waiting down here? Buyers are. I don't want to sell way down here, right? I don't want to trade this like a typical two-try failure, which I know a lot of you guys are familiar with. I don't want to sell this with a buyers once, buyers twice, and sell down like that. Right, you can't use a typical two-try failure, and again, this will make a lot more sense once you go through the free video classes. I can't just simply sell low. I don't want to sell as it's going lower. To pick a top like this, I have to look for that bull trap, that crown reversal. 1, 2, I need to make sure I am selling as high as I possibly can. Again, because if I sell down here, right, I'm usually walking right into a bear trap and right back up again. Because again, it's an overall bull market, right? That's one way to short the top. Now, a second way to do it is basically a V top, right? What'll happen is it'll pop up, slam back down, and grind, grind, grind. These make sense, right? Draw a trend line off that low, bring it up around that high. I still need that bull trap. This one I think makes a lot of sense to people though, right? That bull trap right there. All right. So if it does, it kind of V tops off the high like this and starts grinding down. This is usually a little more reliable trade, right? Because now momentum starts to shift to the downside now. And again, you do not want to sell as it goes lower, because as it goes lower, who's waiting down there? In a big bull move like this, buyers are waiting down there. I need to be taking my profit targets by the time we get down there. And to do that, I need a bull trap off the high. So whether or not it be a crown reversal, bull trap, right? Or this pop and grind. This is usually the more reliable one because momentum shifts. Now, please remember, like I mentioned earlier, these are counter trend trades right now, right? So for me, these are half size positions or quarter size positions. If you're not making consistent money going with the trend, this might be a zero size position. This might be a demo trade for you, right? So just be aware of that. Let's get you making money going with the trend first. Then after a few months of good profits going with the trend with us in the trade room, then we start looking for those bull trap patterns on the pullback. So that's how you sell this thing, right, during that pullback. And again, don't be surprised, it rolls lower. The bears, right, the rookie bears, right, the rookie bear short down here, professional short up here, right? Don't be that rookie bear tomorrow. Don't let that deep pullback fool you into thinking this is a bearish reversal. It's probably not. It's probably not, no matter what the news media says, right? So bears try once, bears try twice, get that 2-try failure and squeeze that sucker right back up to retest that high. All right, guys, those are the variations of this that I'll be watching here for tomorrow. Let's keep going. How about some NASDAQ? Now, NASDAQ is very, very similar here to the S&P. There'll be some overlap, of course, on the NASDAQ. The one big difference, though, is look at the NQ compared to the S&P. The S&P blew right on through those highs, right? The NASDAQ is definitely bullish. There's no doubt about that. But you can definitely see we're getting a bit high right now, right? This does not look like a good spot to be a buyer right now in the NASDAQ, does it? No, it definitely, again, I realize that sometimes the markets keep going up and up and up. But historically, though, if we make it a habit of buying high up here, we're going to lose money in the long run. That's all that matters, right? Over hundreds and hundreds of trades will you make money. So we know we're bullish. We know we're way high up, though. Right now, we're up into areas of resistance. Let's go to the tick charts now. The tick charts are almost identical to the S&P. First clue is that news spike. You'll notice right away the NASDAQ did not complete that news spike. So don't be surprised if this thing keeps on grinding higher here overnight, finishes off that news spike, and then we get that deep pullback we've been talking about here so far, right? Big move, right, on this NASDAQ. Anytime we see a big move, we want to buy a nice, deep pullback, right? And again, like the S&P, we have some shallow pullback areas. I love. If there is a trading god watching down on us right now, please give me a bear trap right below that area. I can only imagine how many buyers are waiting right below that 17,864 area. It's right around the low of that channel. My goodness, that will be a beautiful spot for a deeper pullback, right? A deeper pullback, a much better risk reward ratio. And again, like the S&P, got a bunch of ranges, right? Range right here, breakout, pullback on that range down here, of course, right? Breakout, pullback on that range as well. The game plan is almost identical here on the NASDAQ, right? Think about risk reward ratio. If all I get is a shallow pullback right now, I do not want to buy high, and to avoid that trap, I use a bear trap, right? I wait for bears to try to short this thing a couple times. I look for a strong signal candle, which you guys learn about in the free trading classes, right? And we buy into those stops to finish off that measured move, right? That way, my risk reward ratio is at least balanced, right? Relatively small amount of risk compared to the amount of reward. The more desirable trade here, of course, is that deeper pullback. Now, the deeper pullback, again, gives us a good risk reward ratio. Now we're risking small to earn large, but there's no free lunch, right? There's no free lunch, right? There's always a problem, okay? I always tell our students in the trade room there's always a problem. The problem is always location or momentum, right? There's always a problem. If you don't know the problem, you're ignorant to it, right? You're not aware of it yet. There's always a problem. There's no perfect silver bullet trade. If you think there is, you're missing something usually. Okay, it's always location or momentum. If I see a shallow pullback, the problem is location, right? Risk reward ratio. If I see a deeper pullback, the problem is momentum. The strength of that move down is going to want to pull back and retest that low. Again, I love the idea of buying the deep pullback, but the problem is, the obstacle is the momentum of that move. That's why I don't try to pick the bottom. All right. I won't even begin to try to pick the bottom. I don't care where the bottom is. It's irrelevant. All that matters is once the pullback happens and we start pulling back to that moving average and I start seeing bears come in. Again, these are rookie bears, right? These are not professional sellers. These are rookies chasing after this thing on a 60-second chart, right? A 1-minute chart, right? It'll look very bearish on a fast time frame. It's not a bear market. It's an overall bull market. Once those bears try twice, now we got them. Right? Now we got them. Now we got them. Squeeze those stops and don't you dare chase after that thing, right? Don't chase after it. Get that higher high in price. Get that bear trap below that low and finish the job from there. And again, oftentimes it'll run lower. We'll get the bear trap going lower. It'll pop up. It'll hold, right, a previous support level. It'll run back down. And again, don't sleep on this. This is a great setup. I love these double bottom reversals. Bear traps again, 2-try failure, and do it again, right? Do it again. And again, leave that runner, right? Leave those runners on these entries because Fridays, they love to run. And if we get the least attractive one, right, if it rolls lower and boing, right back up again, begins grinding back up, you know what to do now, right? Right when that voice in your head says, come on, dummy, get into it, you're missing it. No. Off the highs, right, off that low, find those prior swings, and you want that first test, right? First test is always the best test, right? Makes sense? All right, good to go. And then again, you want to short this thing? Make sure you trap those buyers in because we need their stops to fuel this move going down. Buyers try once, lower low. Buyers try twice, higher high. Strong red candle closing firmly below the 21 EMA, right? And you're dropping it off that high. Then don't chase it, right? Pick it up and buy it right back up again, right? Buy it back up again. Or let's say it might go up into that measured move resistance, spike back down again, grind. Again, this is pretty easy. The key is don't chase it. Right? That's the key. Don't chase it. Wait for that pop up. If you're trying to short a bull market like this, you need to sell as high as you can, right? You cannot be selling as it goes down here, right? Because you know what's going to happen down there. Bear traps are down there to go back up and retest, okay? That's how you pick the right top. That's how you pick the right bottom. It all boils down to risk-reward ratio. All right, guys? That's the plan for tomorrow. Now, don't forget, tomorrow morning, every morning, 8 o'clock Eastern time, come trade this with me. The easiest way to learn and start making money in the markets is to do it with me every morning in our trade room. I'll put all the important links in the description of the video. Find the free class links, the membership links, the Twitter links down there. Any questions, any concerns, any issues getting started, don't be afraid to call the office or use live chat on the website there. We're always here to help out every step of the process. It's been a fantastic week. It's been a fantastic day today. Hope you guys made some money, and hopefully I'll see you sometime soon trading with us in the morning trade room. In the meantime, no video tomorrow night. We'll come back next week and finish up what's been a fantastic month of February. Hope you learned something tonight. Hope you use this knowledge to earn a bunch tomorrow. And hopefully I'll see you sometime soon. Trade with me in the morning room, 8 o'clock Eastern time. My name is Joseph. Thanks for being here. Thanks for watching all the way to the end. Get out of here. Enjoy your evening. Be well. Be nice to each other. And you better be here next time. Adios, amigos. Bye-bye for now.